Welcome back, YouTube. So in this video, we're going to start talking about some of the macros for this week, as we have several very important things going on. A lot of things are swinging in the news. We got some train chemicals in Ohio and records of fish and animals dying. We got the fourth UFO that was shot down, well, technically yesterday. We have CPI numbers coming out on Tuesday. We're going to get some concrete information going forward on really what Powell is thinking, because we don't know as of yet. We know that he's open to the potential revising the numbers, and we will get some revisions soon at the next meeting. But this will give us an idea of kind of how to move forward. So lots of things to talk about. I want to start with the UFOs and stuff like that, and the Chinese balloon, all that kind of good stuff. Because outside of, we know the market is driven by two things: fear and greed, right? So if we look at this from a perspective of, if this is some type of, I won't say like if this does spark like a lead to a potential war and stuff like that, that will certainly cause panic, and that is due for a down run in the market. So, puts and stuff like that are certainly print. I said that tonight in my group. I'll say if this does pop off, we're going to certainly see those puts go to the moon, because especially with China, that'll be just really detrimental to the economy, especially in the short term. There'll certainly be a scramble there as far as for the amount of goods and stuff that we import. So whether or not that will actually be like an economical war or, a physical one, but, we'll kind of see. That's to be determined, really. But ultimately, either way, that's not good. And on Twitter, there's a bunch of stuff saying, oh, it's UFOs and aliens and all that kind of good stuff. We've had an eventful week. I know one of the generals said today he's not going to rule out anything just yet, but as far as we're saying it's aliens and all that kind of good stuff, we'll see how it plays out. I don't know if this is just something that's being blown out of proportion, but I do know that if it does lead to some type of war or really just any conflict with any additional nations and stuff like that, that can certainly send shockwaves throughout the market, as we are looking for evidence here via the Fed for recovery. So that can certainly kind of throw a monkey wrench in the plans or the projections for the rest of this year. As for Powell and what to kind of expect on Tuesday with these new CPI numbers, what we're really looking for is confirmation one way or the other. This is the part of the month here where we get the CPI numbers, and before the next Fed meeting, the market starts pretty much aggressively pricing in what it believes Powell and the Fed are going to come to their conclusion, basically, from these numbers, right? So even tomorrow, it could certainly be a little choppy, but it's Tuesday is going to be the day where we get the most. I'll say Tuesday onward, we'll get some momentum in one direction or the other, depending on what we think Powell's going to do. One of the key things that I broke down in the Powell video last time he spoke was his potential to revise the plan. Right now, the plan is to go to 5.25 and, potentially, stay there and just kind of see how core inflation, rental rates and stuff like that are affected. And then we can start winding down from there. So, because we're still away from that 2% inflation that he would like. So what we're going to have to see here, as far as if you're looking for evidence of or at least strong evidence that the economy has reversed and that we're going to go in a positive direction, what we're going to have to see is a reduction in core inflation. And then you could possibly see a rally out of the market, because that is technically one of the indicators that Powell said he was looking for in order to roll back those projections, because he's going to update the projections next month. And as of right now, it's 5.25. We're at around 4.75 right now. So technically speaking, if he sticks to the plan, they can do 2 additional 0.25 hikes from where we are right now. And if he revises the plan, anything but an extension, I'll say, could cause a rally. If he brings it down from 5.25 and says, let's just do 5 instead, that's positive news. That can cause a rally. If he says, we have evidence now, everything's looking great. As a matter of fact, we're not saying we're done, but we're going to pause for right now and see what happens. That can send us on a rocket ship to the heavens, really. And you'll see that start to be priced in. But this is kind of why we've seen, I believe it's why we've seen some of these sell-offs and these consolidations, some low volume and stuff like that, even in crypto, let alone with the stock market. It was either the red volume, or it was either sell-offs or just stagnation. So I believe this is a very pivotal point that a lot of investors are waiting for. A lot of big money is waiting for on Tuesday, so that you kind of get an idea, so that you're not on the wrong side of the momentum going forward. Because this is ultimately going to set us up to let us know what our Q2 is going to look like. Those macros are essential for not only just the recovery and going into Q2, but really just for any of the catalysts that we've seen, because I know some of the indicators have said that we're due for a recession sometime this year. And if we're pausing or cutting back to 5 and stuff like that, that can be viewed as positive for at least reduce the likelihood that we've over tightened already. I know some economists and stuff believe we've already too late. And because we're using a lot of lagging indicators, even if he does pause or do an additional 0.25 and stops, 4 or 5 months from now, all hell will break loose due to a number of projections. Even some of the ones that the Fed actually uses are all predicting recessions at some point this year or a slowdown. And unfortunately, because we use some of the lagging indicators, we can use some intuitive stuff to kind of get an idea, but it does look like inflation is coming down. And it does look like if they continue to raise the rates, it does look like a bit overkill. But also Powell has addressed that and said that if we do start to see inflation pick up, or if we do start to see evidence that we've over tightened, quote unquote, they have measures to deal with that. The only measure I know personally that they have to deal with that is to print money. So we'll start that cycle back up again. But I also believe that it's important for investors to know that this time last year, we were still printing money. QE was still in full effect. March, April will be 1 year since we printed money. And prior to this past year, we were printing money pretty much consistently for like the last decade. So our entire recovery, all of the numbers we've known as all-time highs and the peaks of SPY and all the NASDAQ and all this kind of good stuff, it was all fueled by some QE. QE was certainly being injected into the markets monthly. And I know people believe that the market's always supposed to go up and stuff like that, but sometimes the market looks a little different if there's not an injection of capital going into it. And I do believe they're going to print money again at some point. They kind of have to. But we'll get an idea this week, ultimately. This is one of the things I want to talk about as far as on the macros, if we're seeing inflation or if they're being stubborn and stuff like that. And that way you can kind of plan for the rest of the year, saying that, okay, it looks like they're probably going to pivot. The market's pricing in a pivot, and they have yet to shock the market. They've always done exactly what has been priced in. They haven't come out when a 50 point was expected and said we're doing 0.75. When a 25 was expected, we're doing 0.50. They haven't shocked the market like that. That'll be a huge upset, and we'll certainly see a sell-off if that happens. But ultimately, they've kind of stayed in line. So I believe that that'll be the trajectory. But this Tuesday will give us an indication of what the rest of this year is going to look like, whether they're going to potentially over tighten us some more, or continue on their plan for 5.25, or just kind of see where we are right now. So ultimately, if you are planning, I just say especially if you're doing long-term investments, if you're not long-term, longer than this year, I'd at least give yourself the option to get out of those, i.e. Average down, or make sure there's enough time, like if you're doing options and stuff like that, so that you don't get caught, because this can be prolonged unless they print money or something like that, if these numbers are not satisfactory to Powell. So we'll see on Tuesday. But these are the macros that I'm looking at for this week. Let me know which macros you're looking at in the comments. And of course, we will stay on top of things here, and I will keep you updated, and we'll talk about it. Thanks, and I will see you in the next video.